Hello, everyone. Welcome to this special presentation on the Tying It All Together with the Ultimate Guide to Self-Sufficiency. This is the last episode within our psychology series. This is the final chapter. So I wanted to create this Tying It All Together to try to recap everything that we have been talking about throughout the series, but also providing a little bit of an insight into further concepts to further escalate your psychology and to help your trading grow overall. All right, so this video is going to unravel a lot of hard truths, but is going to ultimately help you to best manage your psychology the best possible way, to unravel things that you may not even know that you're actively doing on a day-to-day basis that's detrimentally affecting your trading every day. So we first have to figure out and understand what the truth is behind psychology, what the truth is behind trading, and really dive deep into the concepts and how they are applied not only to trading but to your everyday life. Right? So I'm sure there are many psychology videos out there on YouTube that probably talk about just the basics of revenge trading and FOMO and all that other, surface level stuff. But I'm going to try and attempt to go into a little bit more detail today to further prepare you for the more complex concepts that we're going to be going over and highlighting within our psychology course that will be released in a few weeks. So this is not going to be a regular psychology video. This is more of me just speaking about my experiences and about different concepts. Now, I do have a list of things that I'm going to go over in this PowerPoint today. And I want you guys to really pay attention and take as many notes as you can as we go through this, because this is a very important stuff that you're really not going to want to overlook. Okay, so as I go into this first slide, I want you to take just a second or two, pause the video, just read through these four things. Okay, now a lot of the things that I'm going to be talking about are going to be under the holding yourself accountable tab. Now I have a list of things in the next slide that I'm going to be discussing. However, we need to understand the truth. Okay, so I'm not going to sugarcoat anything here in this video. If you guys know me at all, you know that I'm very straightforward, that I don't sugarcoat things, because if I sugarcoat things, then you're not going to end up learning. You're not going to end up becoming profitable and consistent in your trading. And you're never going to manage your psychology well, right? So I really despise people who do that sort of crap because it's really unnecessary. The nice guys of this world are not going to really help you. Okay, you need to understand the facts. You need to understand what the truth is and not be pushed sugar-coated information that's meant to help you feel good. Okay, because that's not going to end up helping you. The reason why you've clicked on this video is because you're probably struggling with something psychologically in your trading that you need help with. And maybe you're a break-even trader, maybe you're not even a profitable trader at all, and you need some additional help in your psychology. So I'm going to attempt to unravel some things that I have experienced, that I have learned throughout my trading career and really throughout my life, learn a lot of lessons about this world that I can directly apply to trading psychology here. Okay, so I hope that you take this to heart. I hope that you don't skip through this video. This is a very important video, probably the most important video of the series. Okay, so here is the truth. Poor trading psychology is the #1 reason why you're failing. So this is what I've said before in prior videos. However, I can't stress it enough. My 80-20 rule says that 80% of your trading is based upon the psychological decisions that you make on a day-to-day basis. About 20% of your trading is your strategy. 20% of your trading is strategy, right? Anyone can learn a strategy. Anyone can develop the skills to learn basic concepts and confluences and anything that anyone teaches. But every single decision that you make, and it doesn't even have to be about trading, it could be about anything that you make in life, right? Any decision, because every single day you are constantly making decisions. A decision on whether or not to get up in the morning, right? Whether or not to take a shower, whether or not you want to go to work, whether or not you need to pick up your son or daughter from, I don't know, soccer practice, whatever. There's every single decision. Obviously, I hope you guys are making the right decisions, but every single thing that you do is a decision. And those decisions are subconsciously and psychologically influenced by things that are around you, right? We are, as human beings, are naturally respondent and we're um, what's the word for it? I don't even know. Stimulated, there we go. Couldn't think of it. Brain fart there. Stimulated by our outside environment, right? Everything that goes on around us, we are stimulated by and we have a natural reaction to, right? Like we are, let's say we're watching a horror movie. Your natural reaction is to be scared, right? If you witness a car crash, your natural reaction could be to go and help that person, or your natural reaction is you're scared or you're frightened or you're anxious. When you're trading, your natural reaction when you're losing is to try to make that money back and revenge trade. Just some of the things. Every single thing around you in your life, good or bad, has some sort of decision and it influences your mood, influences your overall experience to what life is, what you're currently going through. Okay. So if we first understand that everything we do is a decision and that every little thing around us can impact that decision, poor trading psychology will be that number one reason why you're failing. It's not because you don't understand the strategy. I mean, definitely if you're a beginner trader, focusing on the strategy at hand and developing the right set of habits and trading plan for that strategy is definitely important. But the people who have technical analysis pretty much under their belt and are really good with it, it really just comes down to the little tiny details. It comes down to the fundamentals. And the next thing is you really understand the fundamentals. And the fundamentals don't really just apply to trading, they apply to the everyday life and how the world works, right? So going into forex, specifically, the fundamentals are the most crucial aspect. You don't play a sport and not understand the fundamentals, even though you could be, the fastest or quickest person out there. You still have to practice the fundamentals every single day in order to be proficient in it. Same goes with trading. Do we understand the basics of trading before we try to be fancy and go into all of these little, tiny little details and go into the nitty gritty stuff? We need to understand the actual fundamentals. And the fundamentals don't just apply to your trading decisions, they apply to really everything in life. So, for instance, we have to understand where our decisions are derived from and how they're influenced, how we are influenced by them, right? So, for instance, you've probably seen so many commercials out there for sports betting, like Caesar Sportsbooks, DraftKings. Those of you who are in the States, you probably have seen that a lot. Why are they doing that? Let's take a step back. I've said this in a prior video, but let's take a step back, kind of use a little bit of common sense here, and step outside of the matrix for a second and observe the world as it actually is and understand, well, why are they doing that? Have you ever questioned pretty much everything that goes on throughout a day-to-day basis? If you see a commercial, don't just say, okay, well, that product is really cool. If I use it, it could help me. Understand and try to think about why they're pushing that product in the first place. Look at it from the other side of the coin. And maybe we can make better decisions surrounding our everyday life if we look at it from the opposite perspective. So, for instance, sports betting. Why are they pushing so many commercials on a day to day basis, giving you all these promo codes to use, saying, you can make a ton of money sports betting. You could do this, you could do that, you could do this, because deep down they know that the statistics, the numbers will say that the majority of people will lose money sports betting. That is why they push that. It is not because they want you to make money. It is not because they think you can make money. It is because they could give a rat's ass about you and only have money for their eyes. They literally just look at you and see money. So they want to take as much money from you as possible. So that's why they present all these commercials saying, oh, come on board with us. We love to have you. We're a community. We're a family. They don't give a rat's ass about you, just like a job. You're easily replaceable. Now, some jobs are a little different. Maybe they actually do care about you, but the majority of them really don't. If you went and cursed out the CEO or whatever and said, I'm quitting because da 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 da, whatever, they, they could care less. They're going to find a replacement for you tomorrow. That's just how the world works. So what really sickens me is seeing all those commercials and people actually do think that they can make really good money sports betting. People actually think that many of the jobs around this world actually care about, being inclusive and having, growing together type of mentality. In all reality, it's just trying to get you to a psychological point in your mind thinking that this company or this, whatever your company about a job that you're working for, or a company in which you're purchasing, goods and services from, are reputable people, that they actually care about you. And that stimulates your psychology to say, okay, I'm willing to purchase this product, or I'm willing to work for this company. In all reality, they're just saying that to make you purchase that product or make you want to work for them. They don't care about you at the end of the day. Same thing with Forex trading. Why was it introduced to the public in the first place? It's because that, I mean, originally it was just the interbank market, and only the institutions and these big banks would, trade. But now they open up to the public because they know that the stats will tell them, hey, look, these people don't know what in the world they're doing, and when they think that they do, we have the money to manipulate price. We're just going to go take their stop losses. So it's like a playground for these institutions because they know that they can make money from you all. So that's why all these brokerage accounts are offering no commission accounts or low spread accounts, or get double the leverage or get a bonus when you join. They want you to do that because 95 to 99% of you will fail in trading over the course of however long it takes. Eventually, you will lose all of your money if you don't do the necessary things and the proper things and the right things the right way. So that is really how the fundamentals really take hold of you. And not even just from a trading standpoint, but just from an everyday life type of standpoint. Take a step back, and every decision that you make, look at it from the other side. Once we can grasp a hold of how the world works and how things work, will influence our trading decisions. So once you know that Forex was made public back in, I believe, 1992 or 1988 or whatever, what's the reasoning behind that? And that's just what I went over. So, based upon that, what's the reasoning behind you guys get hit out your stop loss by a pip and it goes in your overall direction? It's because they're targeting your specific stop loss or a group of stop losses, because these institutions have the billions of dollars to move price. They are the ones moving the market. So when they see a boatload of liquidity above or below a certain level and they go and attack it, not only do they take your stop loss, but it allows them to get in at a better price. Hence you losing and them winning. So that's just the proof in the pudding as to why smart money, first and foremost, works and no other strategy really does. Or, well, I wouldn't say that. I would say, smart money is the most applicable type of strategy for the actual movements of the market. I mean, there are other strategies out there that you can make work for yourself, but um, my whole basis is upon smart money, as you guys know. But understanding these fundamentals and the real harsh truths about this world is really what's going to help you not be so influenced by everyday life and what things are going on, because anything that you come across is affecting your psychology in some way. Now, the next bullet point is why you still don't care. So why you still don't care. Many people are going to look at this video, they're going to skip right through it, and they're going to, go about their day and not practice what I try to teach you. And that's okay. You can do that. Whatever you want to do, I can't control you. You have free will. You do what you want to do. You're in control of yourself. But at the end of the day, those are the same people who are continuing to do the same things over and over again, expecting different results. I've talked to so many people. I've talked to thousands of people in my trading career. And a lot of them have been trading for 3, 4, 5, 6, 7, 8, 9, 10, some of them 10 years, and are still not profitable. What does that tell you? That tells you that, one, they don't have the right mentor, and two, they're practicing the same old crap that they were taught initially, or they're still in they're so stubborn and stuck in their own ways that they can't understand that what they're doing is never going to get them to where they want to be. They continue to do the same things over and over and over again, expecting different results, thinking that eventually something's going to change. That's why trading is so dangerous, because when you win a trade, you feel so euphoric. Then you lose the remainder of the week. win one trade, lose the remainder of the week. All those losses, you know, are directly impacting your trading account, but the win, that one trading win is what's keeping you on board. It's what's keeping you euphoric and keeping you coming back and wanting more because you think that, oh, I won this trade. I must be doing something right. Let me try to win the next one. If I can win this one, I can win the next one. Then when you lose, you're like, oh, darn, let me try again. And you keep going, but you're never quitting because you're thinking that if I do the same things over and over again, eventually I'm going to get to another winner. But you don't change anything up because you're expecting different results but doing the same thing. So, how do those people step outside of the matrix and understand, hey, look, maybe I need to do something different. Maybe I need to find someone who's done it before and get help. Or maybe I need to find a strategy, aka smart money, that I can really learn from and understand that I'm going to fail. But if I revert back to my old ways, I'm going to continue to fail, but think I'm going to be profitable because a different result might occur. In all reality, the same results are going to occur if you do the same exact things. So why you still don't care is that what will happen is I'm going to go through this entire video explaining all these different experiences that I have, all these concepts that are so important that should not be overlooked, and everything that people are probably experiencing on a day-to-day basis that's definitely detrimental to their trading. A lot of the prominent issues surrounding your psychology that maybe you don't even know that you're actively doing. And then you're going to try to apply them, but then still not see immediate success. So what you're going to think is, oh, what he must be teaching is false, or what must he be teaching is probably not true, or it doesn't work, or X, Y, and Z. And then you're going to revert back to your old ways and continue to fail expecting different results. I've said so many times, on my live sessions, I don't trade the same time frame. I don't go from the 1 hour directly down to the 1 minute, but yet I still see people do it. Why? Is because when I try to teach them the right way, they don't see immediate success and they want instant gratification. So they immediately think it doesn't work. So they revert back to their old ways and then they continue to fail with it. No wonder why so many people fail in this industry, right? So another reason why you still don't care is because this is in a PowerPoint format. There's no Lamborghinis outside. There's no beautiful views of the city. There's no luxurious vacation that I'm on. I'm not showing you guys my beautiful lake house. I'm not showing you all that stuff. Because it's not going to help you. How is me sitting and renting out a Lamborghini for a day, creating this psychology video, going to help you in your trading? Me sitting here with my Balenciaga sweatshirt and my gold chain and silver chain, driving my Range Rover, or even renting out a Lamborghini and talking about psychology. How is that ever going to help you? It's not. It's just going to make you influenced by the material things that I have, thinking that you can obtain those material things if you listen to what I say. That's not always the case. So why you still don't care is because this is just in a PowerPoint. This is not influencing your lifestyle psychology in a way. Think about this. Like I've said about sports betting and how about your job and about trading. Let's again take a step back. Let's jump outside of the matrix and look in. Okay? Think about it from the other side of the coin here. All these videos that you guys watch on a day-to-day basis with people driving around in sports cars and looking at these lifestyle videos and people posting hundreds of thousands or even millions of dollars in profit, which are just complete lies. You're influenced by the amount of money that they've made, the material things that they have, the clothes on their back, the cars that they drive, the houses that they live in, but you really don't understand. Do they really know how to trade? The people who know how to actually trade are the ones not posting that stuff because the proof is in the pudding with their own trades. If they know how to trade, they don't have to post lifestyle stuff to entice people to join them. Let's think about it from that side now, right? If I didn't know how to trade, I couldn't present profits. I couldn't present analysis. I couldn't present all these trades that worked out. I couldn't do that. And I would have to revert to posting, you know, about these sports cars, right? To try to entice you to join, right? I don't believe in that. And I don't have to do that because the proof is in the pudding. And if you guys don't believe me, that's okay. But what I would recommend you do, head over to my YouTube channel, type in Aerial FX, how we made 59.6% return in the month of September. Click on that video. I do a full audit of every single piece of analysis, every single screenshot, every trade idea that's sent out real time to my VIP community. And I tally everything up. It happened to be 59.6%. Guarantee you, if you ask any other mentor to do that, they won't do it. Why? Because they're not successful and not consistent. Some of them may be, but are they going to be willing to show you their losses? Most of the time, no. I have no problem showing you my losses. I do it all the time. I say, oh, I've lost NZD CAD, NZD USD, whatever. But I'm willing to be transparent because I know that I'm profitable. People who are not willing to be transparent are the ones who are lying, the ones who are trying to get you to join and just make a sale, right? And that you can apply everything that I've said to literally everything in life. You just have to look at it from the opposite side. And once you can look at it from the other end, you're more capable and more apt to make a better decision. Right? So why can't people who drive Lamborghinis trade? Most of them can't because they don't need to be posting that stuff if they actually know how to trade, because they don't have to entice you through the materialistic things that they have. When in all reality, they could just be borrowing it from someone or renting it out in the first place. How do you even know it's actually theirs? Right? So that's why I like PowerPoints, because it's simple, it's straight to the point, it gives you the information that you need, it's not sugar-coated, it's organized, you can take notes, go about your day, and apply it, and that's it. That's the ultimate goal here, is to make you self-sufficient and not dependent. It's not to entice you through material things, but to enlighten you with technical things and the factual things. That is the purpose here. So that is why so many people still don't care. They're going to go about their day doing whatever and expecting different results because they try to apply one thing that I teach, and when it doesn't work out for them instantaneously, they revert back to their old ways, because a lot of people out there are sheep, to be quite honest with you. Not a lot of people have what it takes to be successful. But if everyone, well, I should say this, everyone has what it takes to be successful, but most of the people don't do it because they're so stuck in their old ways and their psychology is messed up. Because like I said before at the start of the video, every decision that you make is affected by your psychology. So why are people still making stupid decisions every day? Because their psychology is messed up. Further proves my point that 80% of your trading is psychologically based. 20% is your strategy. So you guys can see how I'm trying to prove everything that I'm saying here. This is not just pulling it out of my ass here. Trying to go in depth on some things to make you, become more aware of what's actually happening. The truths to trading and truths about this world. So holding yourself accountable is really the only way that you're going to be successful. Why should I present information and not hold you accountable for it? All right, that's what I do for my VIP channel. That's why so many people are very, very profitable, is because I hold them accountable. I ensure that they're doing the right things correctly. I ensure that they're getting the help that they need, that they're progressing. That's why they come to me in the first place. Obviously, anyone who comes to me is wanting to learn. So those of you who know me know that I'm going to help you do that. It's just a matter of time before it's yours. But holding yourself accountable is the number one thing. So what I'm going to do here in this video, I'm going to go through a list of things. I'm going to have I have one page and I have 2 pages, okay? So the first page, I'm going to talk about each and every bullet point, right? I'm not going to go into, super amount of depth and take up a million hours of your time, but I'm going to go over why, a lot of the reasons why many people consistently fail. Maybe why you consistently fail on a day-to-day basis. Some of the things you're going to resonate with, some of the things you're not. So what I want you to do here to hold you accountable is to first accept the fact that you do these things. People who say they don't do these things are lying, and they can just keep doing their own thing and continue to lose and whatever. So what I want you to do here is write down every single one of these bullet points that I go over. And at the end of the video, after you've learned about them in more depth and after you've really resonated with them and understood them, I want you to place a check mark besides the ones that are not problems for you. Maybe you have a trading plan. right? So you place a check mark. Maybe you actually utilize a trading plan. Maybe you have found your strategy and you understand that hopping from strategy to strategy is not beneficial to you at all. There's no golden strategy. It is not going to help you moving from group to group, from strategy to strategy. You need to look at one thing, find a strategy that is proven to work, and understand that failure is a part of it, and understand that you are not going to be successful with it right away. That kind of ties into instant gratification. So if you know that's not a problem for you, place a check mark beside it. But the ones that, as I go through this, you're seeing yourself, doing these things. Like you have maybe a get rich quick mentality, or you are subject to FOMO on occasion. You do over leverage on positions. Place an X beside that. Be real with yourself and place an X beside it. Because at the end of it, I'm going to go over solutions that have helped me through my failures to where I am right now today. And these solutions are very straightforward, but they're so crucial. So this is why, if you just pay attention and you take what I am telling you to heart, eventually you're going to be successful with it. Obviously, there's no point of watching this video if you're not actually going to apply it. So if you know you're not going to apply it and you just want to hear the things you want to hear, then just please exit out of this video. Have a great rest of your day. But the people who are serious, stay tuned. Okay. So at the end, you should have a bunch of X marks and maybe a couple of the check marks. Or you could have a ton of X marks, who knows? But as I go through the solutions at the end, you can formulate plans in which you can best overcome the X marks that you place against these concepts and actively try to solve them or work on them. And I guarantee you, if you actively try and apply these solutions to your everyday trading and to these concepts, it's not going to make you successful right away. It goes with everything in life. You are not going to pick up a guitar day one, become a professional guitarist. You are not going to learn from Novak Djokovic, the best tennis player to ever live, in my opinion, to instantaneously become a professional tennis player. You can learn from the best teacher and have the best information, but the true teacher and the true way of becoming successful is experience and practice. So no one is going to master all these concepts day one. That's just not the case. Right? Same thing with hopping from strategy to strategy. You're not going to master one strategy. It doesn't mean it's bad. It just means you haven't had experience and focus and determination enough to make it work for yourself. But if you actively work towards this, you're going to be successful later on. It is through my experience and through many of my trading colleagues that have done or are doing this full time, who are professional traders, that is the exact same thing that they would say. The exact same thing. It's the difference between the amateur peasant little, retail trader mindset, to be quite frank, and the professional mindset. It's that difference that's separating the 99% of everyone on this planet from the 1% of everyone on this planet. That's the difference. No wonder there's such a huge wealth gap in this world. It's because the rich get richer because they do the right things. The sheep of this world are doing the wrong things. You get a bonus on your job. Why are you buying a boat? Why are you buying a new car? Why are you doing all that stuff? Why are you buying more liabilities? If you get a bonus, buy more assets. Be smarter. Don't be like everyone else, or you're going to get the same results as everyone else. Right? Just another example as to how, thinking differently can really impact your future. Okay? So revenge trading. Again, I'm not going to go through everything in depth. I'm going to go through everything in depth in the course, but this is nowhere near the amount of stuff we're going over in the course. There's tons of other things, so I highly recommend you stay tuned for that. So all of you VIP members, you guys are getting that for free. I'm so excited to see your reactions from it and how it helps you going forward. So revenge trading. Revenge trading is probably one of the most common things people do, right? You lose a couple trades and you want to place another trade because you want to make all that money back. That's really what revenge trading is. So then that really leads to over leveraging, because you lose a couple trades, you want to make all that money back because you want that instant gratification. You can see how all this is tying together. You want that instant gratification, so you place an over leveraged position to try to make that money back. And you're not following your rules. You're deviating from your rules. You're not following your trading plan. You can see how I can make one example go through each and every one of these concepts. All these concepts tie together. So revenge trading, we need to understand when to put the phone down, the computer down, take a walk, and just live for another trading day. When you lose a couple trades, oh well, leave it. You followed your rules, so you should be happy. Sometimes you will lose. I lose, but at least I follow my rules so I know that I'm overall profitable. I don't have to be subject to revenge trading and the unnecessary losses that I could obtain through that, right? So understand that if you're using proper risk management in the first place, who cares if you lose 1 or 2 trades in a row? The chances of you losing 100 trades in a row at 1% risk is pretty much zero. So you don't need to be over leveraging in the first place. You don't need to be over trading. You don't need to be profitable every single day. Look towards the long term. So many people are short sighted in this world. They look for the short term and don't understand long term. The people out there trying to do 20, 30, 40% a month are the same people who are consistently failing in the long run. Those people who are doing 1 to 2% a month, like me, in my fund, are the ones consistently making profit month after month, year after year, decade after decade. So yeah, I'm not going to be making 20% return a month. I'm not going to be hitting those marks like many other retail traders try to do. But in the long run, I'm going to be making more money than they do because I'm not revenge trading and trying to make everything back at once. Take a few losses. It's part of the game. Move on. Over trading. Over trading is when you're really not following your rules and you're just placing trade after trade after trade, maybe to win a couple trades back, maybe because you haven't seen any setups in the market lately, so you're just trying to trade for the euphoric feeling of being in the trade. It's essentially gambling. I know many people have done that before. You haven't seen a trade, so you just try to find a trade somewhere. Leads to over trading, leads to not following your rules. Over leveraging. You don't need to be risking more than 1% per trade. You really don't. People who are placing more than 1% risk per trade they're just ignorant. They want to be making $1 million overnight. That's not the case. You don't need to be flipping accounts. If flipping accounts were that easy, there wouldn't even be enough liquidity in the market for everyone to do that because everyone would be trying to do that. And it's just not how life works, right? You just don't go from $1 to $1 million overnight. You just don't do that. You don't flip accounts like this. It's not consistent. It's not sustainable. It's not professional. So why are you continuing to try to do that? Let's think about it more professionally. No wonder why a lot of you continue to hop around from group to group and do the same things over and over again. And you get jealous when your friends are making a lot of money or when all these mentors are consistently making money and you wonder why you can't do that too. It's because they're practicing professional habits and you're not. And when I say you, I don't mean you in particular, I mean just in general, right? I'm very straightforward, as you guys know. So I'm trying to tell you maybe what you're doing wrong. And if you don't resonate with that, maybe you use good risk management, then you can disregard it. You're good. Place a check mark beside it and let's keep going, right? But if this is something that you deal with, I'm trying to hit home with you in the sense that you are never going to be a profitable trader ever if you continue to leverage the way you're leveraging in the market. If you're risking more than really 1% per trade, it's unnecessary. It truly is unnecessary. It just leads to so many other things. How does it lead to so many other things? You say, okay, good question. So you over leverage, you're more psychologically attached to that particular trade, which leads to you moving stop loss when it approaches your stop loss, thinking that, oh, I'll just get out when it comes right back down. Oh, it has to go in my direction. I'm just going to remove stop. Or, oh, it's in profit. Let me just secure my profit because I don't want to lose it all. If you're seeing $1,000 in profit go to $500, you're like, oh, I just lost $500. I need to close my trade. But in all reality, what percent return are you actually closing your trade at? So if you're closing your trade at a percent return of less than 1%, you need to be winning more trades than you're losing to be able to be profitable. But the case in with trading is you're not going to win more trades than you lose most likely. And if you are, then you're probably not having high enough risk to reward. I can lose the majority of my trades and still be profitable. Why? Because if I have 1 to 5s every single time, I can lose 4 trades in a row, win the 5th one, and be net profitable 1%. Right? So over leveraging leads to so many other things. It's not just what it is. It's not like you just you lose more of your account when you over leverage. There's so many more other psychological implications of over leveraging. Kind of ties into FOMO, right? So FOMO, I'm going to kind of exit out of the screen here, and I'm going to show you an example like I talked about before within my psychology episode 2 series. This is a beautiful example of how FOMO works in the market, right? So let's just say, for instance, there's many different aspects of FOMO. You're buying upon this trend line. Third touch of the trend line pushes up, pushes back down. What people do is they try to move their stop, thinking it's going to reverse. And now, because this is a weekly time frame, now they're down hundreds and hundreds of pips, and they lost a lot of their account. Now they try to sell it because they think, oh, okay, well, if it's going short, then it's going short. I lost on the buys. I don't want to be wrong again on the sell, so I'd sell it again. Nope, right back up to the upside. Creates a higher high. But the institutional trader would look at this as liquidity. Liquidity being induced, taken, shifting in structure. We want to be pulling back to go long, right? So now what they do is they pull a fib from the low to the high, maybe the 61.8's right in here, something like that, and they look to buy it, right? Or maybe they're looking to buy at this imbalance, 1.0350. Maybe that's the appropriate level, which it actually is. But they see this as, oh, okay, now price is starting to move against me, move against me, move against me. Maybe we've broken the counter trend here to the upside. Oh, now I got to get in upon a pullback, or I just got to buy it because I don't want to miss out on this move. Oftentimes, the fake moves are the sharpest moves. So, and I don't mean that to, because most of the time there's liquidity. If there's liquidity and you see a sharp move, it's probably a liquidity run, and that you can act as your area of demand or area of sponsorship. But when price has not come into any level or has not swept any form of liquidity, and you see a sharp move, it's probably oftentimes fake because it's enticing you to take a certain position in the market, especially because we didn't come into our demand level and you just missed it. You don't want to miss out on this trade because you knew deep down in your mind that you were right every single time, or that you were right in this particular example. So the natural human instinct is not to be wrong. So you want to, naturally you want to be involved in the market here. You don't want to be wrong, especially when it's going in the right direction. You just haven't gotten in yet. So now you're buying at premium price. Price may continue a little bit, but then it's going to fall. Oh, it's going to fall, and now you lost the trade because you weren't patient enough to wait for it to come back down. And even if it didn't come back down, even if it just continued, you need to move on and realize you're not going to win every single trade. It's not going to hit your area of interest every single time. Same thing right in here. Shoulder, head, shoulder. Head and shoulders right in here. Break of the neckline. Selling. Oh, right back to the upside. They lost. Break, retest. This is the neckline. We retested. We started to go short. People sold upon this bearish engulfing candle. And boom, right back to the upside. This can be applied to any time frame and anywhere. Okay, so understanding FOMO can definitely be a huge part of your trading. I talk about it. This is really my entire video, episode 2 of the psychology series. Go check it out. Very, very important. Okay, so on the current side, FOMO, definitely a big part. People want to be involved. People don't want to miss out. And it can be applied not only to trading, but to your everyday life, in friendships, in relationships, and everything. You want to always be involved. That's the human nature. You want to be included. And when you're not included, then you make irrational decisions and your psychology is affected, your mood is affected, and you get angry very quickly or sad very quickly, right? So when it comes down to trading, FOMO is a killer, right? You get in at the worst possible price. Right? Same kind of goes for this example here that I'm going to go over. This is in my psychology episode 1, I believe. FOMO will say, okay, price is going up, let's watch. Oh, the trend is holding, I'll buy at the next consolidation. Oh, I missed it, maybe I'll get in here. Okay, cool. Now it starts going a little bit of profit, woohoo. Now it starts to go down. I'll use this correction to increase my position. Oh, because it can't go short, right? So any pullback, I'm going to be buying again. Brilliant. At this price, let's double it. Cool. I'm getting it at a better price. Nope. Right back to the downside. Ouch. As soon as it goes back up, I'm selling out. Meaning you're not even understanding the proper position to take profit. How do you know that price is when it's going to come back up to your break-even level that it's actually going to reverse? Why couldn't it continue to go in your direction? But you're taking it out irrationally and just taking it out when it breaks even because that's where you got in the first place. It has nothing to do with the technicals behind why price would actually stop at that particular area. So if that doesn't make sense to you, think about it like this. If I bought it, let's just say right in here, and price goes down, why in the world, if price reverses back to the upside, first and foremost, I would never just move my stop to the break even in the first place if I'm in a loss to try to get out and not lose a trade. That's just stupid in the first place. But what based upon technical analysis, if you're telling me that when price comes back up and hits you break even so that you don't lose anything when you were originally in drawdown, That means you took your position out at break even. That's essentially selling your position right there. Why not place a short trade? So if you thought that, okay, it's going to come back up to break even, if I'm not going to hold and it goes into profit, you're thinking that it's going to hit your break even and go back to the downside. So why not sell it? Right? It's all psychologically based. You're not making irrational decisions when it comes to the market. Everything is not a technical type of trade. You're making it a part of your psychology. You're letting your emotions handle everything that you do, which is why 99% of you continue to fail on a day-to-day basis, right? So, let's continue here. 8. I don't believe it. It's down to 8.25, hits absolute bottom. It's got to go up eventually. Let's wait for it to recover. That's what people think. Oh, I'm moving my stop loss. I got to move my stop loss because it's going to have to eventually recover. The worst mindset you could possibly have. Number 10, what's the SEC doing? Whatever. Enough. I'm selling out. You've had enough. You hit your psychology too hard. You're getting out. Now you get out here. Price continues to sell off. You're like, good. I sold everything. At least I was right. Pullback. You're in denial, right? I has to go short anyways. It's just having a pullback. 14. Told you so. 15. Right back to the upside. You're like, you what? What in the world's going on? Why is it starting to go long again? And 17, more crazies who are going to get taken out to the cleaners, meaning they think that, oh, well, I'm not wrong. So when price goes back up and people are trying to buy, because I don't want to be wrong, I think the market's going to go short. So everyone else who's trying to buy here is crazy. Because from a human standpoint, from a human nature standpoint, you are never wrong. Who wants to be wrong? No one wants to be wrong. So the confirmation bias says that I'm going to try to pinpoint every piece of information and to try to articulate every little thing to try to go with what I'm thinking, to try to go with my bias, to try to go with what I believe is true. So you disregard every piece of factual data because you're only picking and choosing the things that go with what you think is going to happen, which is why people will say, oh, well, I can't be wrong, even though price is actually going up. So they are actually right. You're just the one that's wrong here. They're not wrong, but you think they are because you think that you can't be wrong. So you think the price has to go short because you don't want to be wrong, which is why you think they're going to lose because they're buying. Number 18, that is it. I knew this was going to happen. Now you're in acceptance of your trade. You're like, I knew it. Whatever. I've lost. Drat, I'll buy in again. That's when you buy in again. And the cycle starts all over again. Right? FOMO, fear of missing out, buying up here, selling down here happens all the time. So many people get that, have that problem. So a check mark should be, or excuse me, an X mark should be within FOMO for pretty much all of you. If you don't have FOMO, then I guess you're doing something right, and that's a good thing. Okay, that is, I don't in my program I don't just teach technical analysis. I teach all of this stuff. I teach FOMO. I teach overleverage. I teach all of this stuff and how we can overcome them because it's like I said before, it's not just the strategy and understanding the rules of the strategy. It's understanding your emotions, understanding the bigger picture, understanding the concepts of psychology and how every little thing that goes on in the markets impacts your decision making. Impacts your psychology, which in turn impacts your decision making, influences the amount of money you make if you don't do it the right way. There are very specific things that we can be doing correctly, and I'll go over them at the end. But here are these are the major problems. Another one, no trading plan. How do you expect to do something consistently if you don't have a plan for it? You can't just do things willy-nilly. The people who do things willy-nilly here and there aren't keeping stuff consistent. Why, if you guys have 9-to-5 jobs, those of you who have those jobs, why are you so good at those jobs? It's because it's the same process over and over again. You're getting good at it because it's repetitive, most likely. It's the same thing over and over again, right? No wonder why, when you first started that job, you probably didn't know really what to do. So that's why you had to be trained. But once you finally were trained to do that same thing over and over, you became very good at it. So what makes you think in trading, if you do things differently every time, that it's just going to be profitable for you every time? You need to keep things consistent. Trading is supposed to be boring. It's supposed to be repetitive. It's supposed to be the same exact thing. Yes, you will lose doing the same exact thing, even if you're doing the right thing, because not everything is 100% guaranteed. But the people who take losses and say it's a part of the process, a part of the game, I will lose on occasion, but I stick to my trading plan, knowing that if I do it consistently in the long term, I'm going to be profitable. Those are the people who do well. We have to learn how to do that. Stick to a trading plan no matter what. Setting unrealistic expectations and return goals. So many people, like I said before, want 10, 20, 30, 40, 50% a month. Totally unrealistic. The average hedge fund does about 10, 15% a year if they're good consistently. 10, 15% a year. So what makes you think you can do 10, 20, 30, 40% a month? If you can do that consistently, why don't you become the best hedge fund out there in the whole world? You'd be better than Ray Dalio, the best hedge fund manager to ever live. Has $140 billion under management in Bridgewater Associates, in Bridgewater Capital. So why are we setting those unrealistic expectations? Because you want to get rich quick. You have the get rich quick mentality. You want the instant gratification. You want to make as much money as possible, and you don't understand the long term because you're so focused on the short term. And guys, remember, when I say you, I don't mean you in particularly. I mean just in general, the general, audience, the general, retail trader. That's what I mean by when I say you. So, you always, set unrealistic expectations because you want to make a lot of money very quickly. And you don't look at the long term to even think about how 1 to 2% a month can make you a multimillionaire over time, doing it the right way. It's not going to make you get rich quick, but it's going to help you get rich in the long run. I'll tell you that, because of compound interest and consistency. That's why, my fund does about 1.5% a month. In all reality, that beats S&P, that beats inflation, that beats most hedge funds out there in the space, and provides me with tons and tons and tons of profit. Because as you increase your capital, you can get the same percentage return, but make even more monetary amount, a higher dollar amount, because 1% on 10,000, right, is, what is that, $100? And then 1% on $1 million is $10,000. Same percent return, different monetary amount. That's why people set unrealistic return goals, is because they're so used to having $100 accounts and $500 accounts in this industry. But you wouldn't trade the exact same way if you had $1 million, right? 1% of $1 million, would you be satisfied with $10,000 a month? Okay, so why are you not satisfied with 1% a month? It's because you think about it in a different way. You think about it in terms of money, not in terms of percent return or ROI. Okay, I want to start unraveling some things that professional traders do versus the retail bullshit. Okay, and if you find yourself setting unrealistic expectations, if you think 10%, 20% return a month is good, ask yourself, are you profitable? The answer is probably no. What does that tell you? Maybe you're doing something wrong? Possibly. Just think about it like that. Okay. Quantity over quality. Many traders, and this isn't really a big thing for a lot of traders, but I felt as if I would apply it here and talk about it. I would say the majority of people that I've come across somehow have, they have some sort of plan. They do take quality trades, but quantity is definitely something that will kill you. Taking more trades doesn't mean more profit. I would rather take one trade a month at a 1 to 5 and win that trade 5%. That's 60% return a year, rather than taking 20 trades a month at, a 1 to 2, a 1 to 3, and I'm not having quality trades, I'm having quantity trades, thinking that I'm going to make more money, but in all reality, I'm just going to be losing because those aren't quality setups, and then I'm going to be losing more than I'm winning, and then I'm now in the negative. So that is why part of the reason why we stopped doing signals is because many people would literally message me and say, hey bro, can you send me a signal today? I just laugh at them. You know why I laugh at them? Because what if there's no setup? Do you want me to pull something out of my ass and say, okay, buy gold at 1920? I don't know. There's a signal for you. But is it actually a good one? No. So why do we bitch and complain and moan about losing one trade, but wanting so many different setups and so many different trades? Again, peasant mindset, sheep mindset. As you guys know, again, I'm not sugarcoating things. This is the truth. This is how people actually think, and it's quite sad. And if you're getting a little sensitive to what I'm saying, please, respectfully just exit out of this video. Because to be quite frank, I don't really care. Because I'm giving you the correct information. And if it's sensitive to you, well, at the end of the day, you're not going to learn. Okay? Take constructive criticism if this is stuff that you're facing and utilize it. Okay? Not everything is happy-go-lucky in this world. I had to deal with the same crap when I first started. I was yelled at a lot too. But it helped me learn, and it helped me to where I am today. Okay? Deviating from your rules. Consistency. You need to use the same set of rules every single time. You start to deviate from them because maybe you're attached to a trade because you're over leveraged. That leads to revenge trading, leads to over trading, leads to that instant gratification. When you start deviating from your plan, you're not having quality trades, you're having quantity trades. You're having trades that don't make the most sense. Hopping around from strategy to strategy, like we talked about. It's not the strategy that's bad, most likely. It's just the trader who doesn't put in enough time and focus and energy and dedication and experience in order to make it work for them, right? So we have to find, first of all, a mentor who has the right strategy that has worked for them consistently, that makes sense based upon how the market truly works, aka smart money. Applying that strategy using back testing through proof. Now we can prove that strategy works consistently over time. And if we understand that everything that we do requires experience to become good at, what does that entail? That entails initial failure. So it doesn't mean the strategy is bad, it just means you are failing initially because you don't have enough experience yet to make it work. Over time, you will become profitable with it. And then you'll really truly realize that it wasn't the strategy, it was just me not having enough experience. So that, again, that leads to instant gratification. Everyone wants instant gratification. They love it. They connect. Not many people I come across can delay gratification well, right? You want to buy a car. Maybe you don't have enough money to buy it, but you spend every single penny in your bank account to buy it because you want it really badly. It's that instant gratification. It's that immediate endorphin dopamine release in your brain that you truly want. It's just like people who are addicted to nicotine. You got to get that fix. You got to get that high, that instant gratification to make me relax and make me feel good, right? Don't let that control you. Don't let instant gratification control you. Okay. So delay your gratification, and that's going to produce better habits for you in your everyday trading. And it won't lead to the get rich quick mentality. Because in all reality, you guys know this for a fact. You guys just, and if you don't, well, I'm going to enlighten you. It doesn't work. Okay. There are people who can flip accounts. Sure. I've seen it happen before, but it doesn't mean they're going to consistently do it. They're eventually going to lose, and they're going to start from square one right back at zero. The get rich quick mentality does not work. The richest people in this world, the millionaires and billionaires, all you see are their fancy cars and their houses, and you think it's easy. But did you see the struggles that they went through to get to where they want to be? Did you see the struggles that Jeff Bezos had to go through when starting Amazon to get to one of the richest men in the world? No, you haven't seen that. But if you have seen that, you would understand that he didn't get rich quick overnight. He wasn't an immediate success. It took time. It took failure. Warren Buffett doesn't invest in any company or anyone who has not failed at least twice. Why is that so cool? Because if you don't fail, if you haven't failed, you haven't learned. So when failure comes around and you don't learn from it, or you don't know what to do when you fail, it's gonna be bad for everyone. It's gonna be bad for the person, it's gonna be bad for the investor. Okay? Failing is the only way that you learn. So getting rich quick, that's not teaching you anything. Failure, and that's what's necessary for you to become successful, is the only way that you're going to become rich. And that requires the delaying of gratification. All right. The next step, I'll try to go through these a little bit quicker. Treating trading as a hobby, not a business. You can't treat trading as a hobby. You can't do trading when you want to do it. You know why? Because it's not that easy. You can put a puzzle together whenever you want to. Sure. 1,000-piece puzzle, you can put one piece a day on. Sure, do it whenever you want. It's going to eventually get complete. Trading is not that way. You have to treat it as a business, as a career. Why? Because it's either you are profitable or you're not. There's no in between. You're either making money or you're not consistently. You're either consistently losing or consistently winning. There's no in between. There's no one or the other. So if you're consistently losing, you're not doing the necessary things to become successful. You're not practicing enough. You're not having the experience. You're treating it as a hobby. You're not doing it seriously. You're not focusing. You're not, treating it as something that is required of you or you're going to die. So, something like that. But on the other side, if you're profitable, that means you have learned the right way. You have practiced enough. You've gone through the failure. You've treated it the right way, and you are successful because you've treated it as a business. You've treated it as a career. You have to treat it as something that you do full time. Even though you don't have to do it full time, you need to treat it as such because the only way you're going to get profitable and successful and consistent with trading is that you have to do it. You have to treat it as a profession. You have to do everything, every little tiny detail professionally. That's how you get to understanding how trading works and how in profitability. Then after that, it's just all about scaling, and you can make millions of dollars. But if you treat it as a hobby and doing it willy-nilly, you're not getting the right experience, you're not practicing the right habits, and you're only going to fail. Lack of discipline and losing focus. Lack of discipline to so many people. How many people are disciplined in this day and age? Not many. Many people are lazy, they procrastinate, they make excuses. Most people live on government income because they can't make a dime for themselves. It's really sad. They lose focus so easily. The rise in ADHD in this world is increasing at a faster rate than ever. I don't know if that has anything to do with parenting or just their environment that they've been in, but the phones, the video games, it slowly, subconsciously, just like edits your brain in a way, like it just messes with your brain because when you play video games for a long time, that is what you're focused on, right? So when you can't focus on something and you need that fix, you instantly go to playing video games or go on your phone. That's why everyone here has their phone probably within a foot of them right now because it's an immediate attention grabber. If you're losing focus, if you need something to occupy your mind for a second, you pick up your phone, you pick up video games, you pick up something to get that focus. No one can focus on their own with no distractions and nothing around them, no electronics for an extended period of time, most likely. Not a lot of people can do that. But you need the focus. You need the discipline, even when you're failing. Even when you're failing, are you willing to continue to get right back up and continue to do the same things? Are you willing to persevere through, knowing that you've done one thing and you failed with it, you're going to do it again? Having the knowledge that eventually you're going to get it and you're going to succeed. Thomas Edison didn't create the light bulb on his first try. It took thousands of tries. Yes, he was changing some things up, but everything was disciplined. Everything was relatively the same. Right? Obviously, he had to change some things up to get different results, but he was practicing discipline. He was practicing focus. He was practicing consistency, even when he was failing. Not having the stress about, oh, if I'm going to do the same thing and I failed before, why would I do the same thing again? Because I'm just going to fail again. Well, it's consistently doing a little bit different things, but consistently and repetitively doing those same things that's what's going to eventually lead to your success. So discipline and focus are so important. The hothead mentality. People have this all the time. They win a couple of trades, they get euphoric, and then they lose sight of where they're at. They over leverage, then they start deviating from the rules because, oh, they can't lose. They're on a hot streak. I have a hothead mentality. I can do whatever and still win. And then it humbles you very, very quickly. Okay. Fear and greed. This is a big thing. So a big thing about psychology is fear and greed. You're fearful that you're going to lose money. You're fearful that you're going to disappoint someone. You're fearful that you're not going to prove to yourself that you're a good trader. You're greedy. You want to make as much money instantly. You want to, buy that fancy sports car day one. You want to flip your account day one. You're greedy and you're fearful. That is what leads to your ultimate demise. Okay. Again, remember what the first couple things we talked about in this video is looking at things from the other side of the coin. flipping the coin upside down and viewing it from that standpoint. Fear and greed control you because it's so easy to be subjected to them. When you lose a trade, you're fearful for losing another one. Therefore, you don't place the next trade that meets all your rules because you're scared to do the next one. Greedy. You're winning a couple trades, you deviate from your rules, you over leverage because you want to make even more money because you're on a hot streak, but you have the hothead mentality. You get greedy and you don't do the same things over and over consistently. How do you know when you're going to lose? When you lose, you're going to lose big if you're greedy. But if you're smart, you'd only lose the same amount as if you risked, as any other trade before. It eliminates that. Impatience, FOMO, kind of ties together, right? Be patient for your setups to come to you. When there's no setups, don't trade. Don't trade for the sake of trading. Don't trade just to be involved. That's just gambling. You probably have a lot more fun getting drunk with your friends in Vegas, losing money at the casinos than losing money trading. So don't be greedy and don't gamble in trading. Go gamble somewhere at a casino. Have more fun. Right? Patience. Patience pays. The double P. Okay? Patience pays. Same with FOMO, like we had before on our example. People who are greedy and impatient to get into the market got in too early. Now they're stuck in drawdown or even stuck at a loss when price comes back down to their original level because they weren't patient enough to wait for it. Simple things like this. And again, guys, this is all just surface level stuff. We're going to be going into a lot more detail on the webinar, which, by the way, is the 29th, which is in 2 Saturdays from now. So make sure you go to my website, Area of X Trading, and book your free ticket. Just sign up through my website. There's a button that says Psychology Webinar. Just fill out 3 pieces of information, and then you'll automatically be sent the link with the passcode to join the webinar a day before it starts. So on the 28th, you'll be sent it. That just reserved your spot because there's a lot of people who want to join. So we have to limit the number of seats available. All right, next, pips over percentages. This is one I talked about in the last video. I believe it was episode 4 of the series. Many people think about profits in terms of pips and not percentages. What makes the most money is percentages. Why? Because when you think about it in terms of pips, you're thinking about it not from a risk standpoint. So one time you have a 10 pip stop loss, next one you have a 20 pip stop loss, next one you have a 30, then a 40 pip stop loss. But if you're using the same lot size over and over because you're focused on the pips, that means you're losing different amounts every time. That means you're not following risk management. That means you're probably over leveraging. You have to adjust your lot size based upon the account size that you have, the pair that you're trading, the amount of pips your stop loss is, and the currency that you have in your account. Because everything combines together to formulate the right lot size. Someone who makes 500 pips a month, and then another person that makes 100 pips a month, that person that makes 500 pips a month versus the one that makes 100 doesn't mean they make more than them. They made more pips, but it doesn't mean they made more money. The person who has the best risk to reward, the best percentage return, I can make 5 times as less pips as you, but still make more money than you because my risk to reward was higher. So pips do not matter. Percentages matter. It's the only thing that matters. Getting funded too quickly. Instant gratification is the number one thing here. Getting funded too quickly, people want to make money instantly. They don't care how good they are. They don't care if they've been failing for 2 years, 3 years, 4 years in a row. They just want to keep trying to pass these funding challenges because they want 50 grand under their belt to trade with, 100 grand under their belt to trade with, thinking that they can be making $10,000 a month with prop firm money. How do you expect to pass challenges and not only pass, but keep those challenges month in and month out if you're not already profitable? It baffles me, ladies and gentlemen. The amount of people who try to attempt these funding challenges, they're not even profitable to begin with. Why are you wasting your money? Get real with yourself. Delay the gratification. Invest in your education. Learn, have experience first. And when you have about 6 to 12 months of actual profitable data and experience under your belt, then go for a challenge because you're more likely to pass when you know you're capable of doing it than someone who just wants to make a quick buck because in all reality, you're just going to fail the challenge. Or even those of you who pass the challenge, you're going to fail month 1 and not even get a payout. And even if you do get a payout, you're probably going to fail the next month because doing something consistently for 3, 4 months before you get your first payout is very low, especially for those who are not profitable to begin with. Right? So think about it like that. Don't waste your money on challenges if you're not already profitable. Don't waste your money on challenges because you want to use someone else's signals as a way to use prop or pass prop from challenges. It doesn't work. It's not good. Okay? It's not going to help you. All right? That's the truth. Outside influences impact your decision making and your psychology. So many websites, so many videos are like, oh, EURUSD is going long, EURUSD is going short. There's so many pieces of information out there, guys. Information overload is very real. Everyone has their own opinion. Everyone thinks AU is going long, and then some other people think AU is going short. A lot of other people think NU is going long. Other people think it's going short. Who knows, right? Focus on what you know and practice the strategy that you were taught and make the decision based upon yourself and not being influenced by other people. Don't be influenced by social media. Don't be influenced by a website or a video that tells you, oh, buy EURUSD. Because what if it goes short? Then you're going to be like, oh, well, that doesn't work. Well, yeah, it doesn't work because you're so influenced by other people. How are other people going to make money for you? They're not. You can only make money for you. When you have so many different perspectives, information gets jumbled around and you're not able to make proper decisions and consistent decisions for that matter. So we got to do a better job of, having the outside influences not become a part of our trading, right? Focus on you. Focus on what you know and learn for yourself and not be influenced by other people because they're not going to help you. They can help you short term, but they're not going to help you long term. And what do we know about anything in life? You can't do something short term and be consistent with it. You got to think long term. Right? So if I told you that you have a 33% chance of winning a coin flip, I know it's 50-50, but just humor me here. And every win that you get, I'll pay you $100. Every lose, you pay me $100. But if I gave you the percent that you would lose 66% of the time, sure, you could win one time. You could hit that 33% chance and win short term. But in the long term, the odds are against you. So over the long term, you're going to lose. Same thing with outside influences. Everything is different. The probability that all of those perspectives that you take into consideration are actually going to play out at least 50% of the time are low. Very, very, very low. You can't let those people influence any decision making for you. Diversification instead of specialization. This is something I say in the live sessions all the time. I always say, learn a lot about a little, not a little about a lot. Because if you're learning a little about a lot, you're not really understanding what you're looking at. You're understanding of bits and pieces here and there of a broader perspective or a broader market. Some people trade US 30s, NASDAQ, gold, GJ, EN, I mean, everything. Right? But they don't understand the way that those pairs move or the way that those markets move. They know a little about a lot of different things. So how are you going to expect to make consistent money when you really don't understand a lot about each and every one of them? That's why I say diversification. Stick to like 3 to 5 pairs. That's all you need. Learn them, master them, understand their movements. Every pair moves differently. Even though they're based upon smart money concepts, every pair moves slightly differently. Understand how they move, how they react off certain levels, what their nitty-gritty details and intricacies are. Learn them. Once you've mastered them and know a lot about a little, you can just trade those and you're going to be more highly probable that you're going to be making money from those pairs because you understand them. You don't need 10, 20 pairs trading all at once. Trade 1 to 2, well, I wouldn't say 1 to 2, probably like 2 to 3, maybe 4 or 5 pairs at any given time. Meaning don't trade them at any given time. Just have those in your arsenal of trades to look for, right? You don't need to be in trades every time. That's not what I'm saying. I'm saying look at just a specific few and do analysis on them and learn them all. Diversification is not always the best thing when it comes down to trading. When it comes down to learning things, specialization does. When it comes down to investing, for the long term, yes, diversification is always good. Very good. Having uncorrelated things are very good because you don't want to put all your eggs in one basket. When it comes to learning, putting all your eggs in one basket is very beneficial, in my opinion. Lack of preparation kind of ties into lack of discipline. This is a big thing. If you're not prepared, and simply put, if you're not, if you don't prepare at all, then you can really prepare to fail, essentially. If you fail to prepare, you prepare to fail, essentially is what it is. I'm sure you guys have heard that before, but it's true. You don't prepare your trading plan. You don't prepare your everyday. You don't have a routine on a day-to-day basis. You're not focused. You're not disciplined. You don't have your rules in place. If you're not prepared in your personal life, you're not going to be prepared in your trading life, and vice versa. Definitely very important. Your personal life interferes or intervenes with your trading life. If you have a stressful personal life, if you're involved in a family dynamic that is not healthy, if you are always stressed out because of your job, if you are, having a lot of responsibility and it, makes you upset or sad or whatever, it's going to directly impact your trading. Traders don't have these extravagant lives. They really, really don't. They really have simple lives, to be quite honest. They keep their life in alignment with their trading life. If they're very, very busy, they're most likely swing traders. If they have a lot of time in their hands, they could be scalpers or intraday traders. It all depends on your personal life, right? So we need to align our personal life with our trading life. They cannot be not in alignment. They have to be the same, or else both of them are going to be impacted negatively, right? So if you are a scalper, but you have a job or some sort of trade job, like a labor job that requires you to be physically doing something the whole day, you're not going to be able to check your phone all the time and keep up with everything. You're not going to be able to keep up with the trades and be able to manage them correctly. So that personal life is going to be affecting your trading life in a negative way. So you have bad relationships with friends and family, that's going to affect your mood. That's going to affect your focus. That's going to affect your energy levels. Therefore, it's going to affect your trading. Right? So there are specific ways in which we can control our personal life better and our trading life so that each of them are in alignment with each other. And I talk about that in the course, and I also talk about that briefly in the other videos within this series. Okay, so now going to the solutions, because everything that I say should provide a solution. I can't just provide you with all the problems and not give you solutions to them. So through my experience, I've tried to think really long and hard about this, and I could only come up with 4 things. And really, those 4 things are the only things that you really need in order to succeed. You need an action plan, you need mentorship, you need to be able to trust the process, and you need accountability. AMTA, whatever that stands for. Making it up. Action plan, mentorship, trust the process, accountability. That's it. That is how you go from A to Z. So how do we do that? We first need an action plan. Okay. And really what we first need is mentorship. Actually, I'm going to do this. Mentorship first. Action plan second. Trust the process third. Accountability fourth. Mentorship. It is extremely difficult to do things on your own. It is extremely difficult to make things work for you by itself. Right? How do you know what to study for? How do you know what mistakes to look out for? How do you know what to learn from when you fail? If you don't have any guidance from someone who's done it before, you're not going to be able to learn the right way. If I trade and I fail, how do I learn from my failures if I don't have anyone teaching me what I actually did wrong? Then I can learn from them. Mentorship is huge. Every millionaire and billionaire that I know has a mentor. Everyone. If you think mentorship is insane, well, then you're insane, to be quite frank, because mentorship is so important. And I'm not telling you to join my group. If you find someone else that you resonate with, I recommend that you join them, because investing in your education is the biggest thing that you can do. Set aside and delay the gratification. Don't say that, oh, when I make money in trading, then I'll pay for mentorship. Well, if you're making money in trading consistently, then you don't need mentorship. But you're probably not doing that. So why are you trying to trade and gamble to try to make money when you don't really know what you're doing in the first place to try to pay for mentorship? Get mentorship first. Spend some money. It will work out in the long run. If you want to trade, think about this, guys. If you want to trade, you probably want to make a lot of money. Is that right? I'm sure that's correct. Most people want to make thousands of dollars. Let's say your goal is to make 100 grand in trading, because who trades just for the sake of trading? You want to make money. That's the whole point. So let's say 100 grand, maybe even $1 million. Does mentorship cost 100 grand? Does mentorship cost $1 million? No, it doesn't. So why not get the help you need, spend some money? It's an investment to then be recouped later in the form of profit, in the form of knowledge that you've obtained, and then you can go out there and make your 100,000 or $1 million over time. That will pay for mentorship 1,000 times fold, right? So you need to be able to spend a little bit of money, invest in your mentorship and education before going into anything. I've spent thousands of dollars when I first started trading learning, and I've learned a lot. Come across a mentor that was, wasn't expensive, but he, obviously he did charge for his time just because it is his time. But I understood that this is what I wanted to do for the rest of my life. So the money to spend on education was nothing. It's you. Only thing standing in the way in between you and profitability is just that investment in your education. But make sure you do your due diligence first in your mentor. You know, so very important that you do that. Do something that you can resonate with, that the mentor actually cares about you, right? That the mentor is actually a profitable trader in the first place and not just a showboat with fake Lamborghinis that he rented from some dealership, right? Stuff like that. Make sure you're working with someone who can really guide you along the way. Then putting together an action plan. How are you going to attack the markets? What is your plan going forward? Putting everything step by step, could be in a trading plan, could be on a month to month, year to year basis in terms of what kind of action you want to take at different times. Just putting together some sort of action plan is going to be important, and that you should really work with a mentor to do. And if your mentor is not willing to help you put an action plan together, you need to leave that group, because in all reality, they could give a rat's ass about you. They don't care. They just want your money. Go to them right now. If you have another mentor, go to them right now and tell them to help you create an action plan for your trading. And if they're hesitant, or if they say, I don't really have enough time right now, maybe a little later, just leave. They don't care about you. Find a mentor who will help you and sit down with you one-on-one, put together an action plan for your trading. A mentor is supposed to do what? Help you become, in this case in trading, profitable, consistent, successful. If they're not willing to help you, they're not a real mentor. And if they claim to be, they just want your money. Remember, let's think about things from the other side of the coin here. Let's look at stuff from the outside in, okay? Trust the process, biggest thing. Many people, instant gratification, they want to get rich quick. They want to jump around from group to group, strategy to strategy. They don't trust the process. They don't understand the value of time. Time is the true teacher. Experience, you can't speed up time. Therefore, you cannot speed up experience. It comes with time. It's a natural byproduct of time. So if we can trust the process and understand that we're going to fail on occasion, and it's part of the process, then we're going to be successful later on. Trust the process, very important. Trust the time. The time will heal all. Time will be on your side, okay? You guys are not dead yet. You are still alive. You have time. I don't care if you're 90 years old, you have time. Because I would rather die trying than not try at all. Trust the process. Keep going until you get it, because if you don't get it, if you quit, what gain do you have? There is no gain. There's just loss, right? So understand that time is the biggest teacher, experience is the biggest teacher. Trust the process as you go. Don't quit because of failure. Understand that failure is a part of the game, and continue to work through it and just gain the experience month after month, year after year. It took me 18 months to become profitable with the strategy that I was taught through my mentor. 18 months. It just goes to show that experience is the true teacher. I literally probably knew about 70 to 75, maybe 80% of everything right up front than what I know now. But the reason why I was still inconsistent, even though I knew the majority of the information, is because of experience. I didn't have the experience on my side. As you go through trading, you're going to start to pick up on these things. It's going to become ingrained in your brain. It's going to become second nature. It's going to psychologically it's going to help you. Time heals all. More information, the more time you have, the more information you can soak in, the better your decisions will become over time. Okay. And accountability. And this goes with mentorship as well. Find someone, specifically a mentor, that will hold you accountable for what you're doing. Okay. If you're not held accountable, you're not progressing most likely, or you're not progressing as fast. So accountability is very, very important. All right. We need to be making sure that you are progressing, that you are learning, that you're doing the right things necessary, that you're practicing the right habits, that you're thinking about things the right way. If we can do that and hold you accountable to that, it's just a matter of time before you're successful. Right? Action, mentorship, action plan, trust the process, accountability. Those are the four main things that will solve all of these problems. But what does it come down to? Practice, practice, practice. It comes down to finding someone to teach you the right things, aka mentorship, an action plan that you can actively be working towards and working on, aka action plan, time and experience to go through and work on all of these problems, aka trust the process, and then someone to make sure you're doing the right things and practicing the right habits, aka accountability. All four of those things really should be a part of mentorship. But even if you don't have mentorship or somehow don't want it, which I highly recommend, really the action plan, trust the process, and accountability will be your best top three things. Okay. So guys, I hope you took some value from this. Hope you learned a lot. We're going to be holding that psychology webinar on the 29th. That's 2 Saturdays from now, from this time that I'm creating this video. Please register on my website. It's completely free. If you would like to secure your spot, I think we only have like less than 100 spots available now. A lot of them were taken up day one. So if you want to get in, I recommend getting in as soon as possible. And we will be going over more in-depth detail about psychology, going over some more concepts that will really help you, sharing experiences that really have helped us as traders, helping you through problems that you're facing. We're going to make this very interactive. We're going to be doing a little quiz at the beginning and the end. It's going to be very cool how this is going to work. So you're not going to want to miss out on that. It's going to be awesome. And then that course will be released 2 days later on the 31st on Halloween. We're going to be running a big, huge promotional deal. So for those of you who are not in VIP who wish to participate in that course, we are allowing a big promo deal on that. But those of you who are in VIP, you will be receiving that course absolutely for free as a thank you for being a part of our mentorship program. All right, guys, so if that's something you're interested in, if you are not profitable and wish to gain that extra edge and help the little tiny details in your trading to really escalate your trading, feel free to consider my mentorship. Consider the way that I teach, consider the way that I help my clients, and consider the facts that I present to you. I don't need to present my lifestyle. I just need to present the proof in the pudding, which is the facts. Okay, at the end of the day, that's what really matters. That's what's really going to help you. So if that's something you're interested in, head over to my website, arielfxtrading.com, and book a free call with me. I'd love to talk to you about how we can create an action plan for you going forward so we can help you reach your overall goals and become overall successful. If you guys are already profitable, I recommend you even stay tuned for my other videos as you continue to learn, but also consider helping other people. Consider becoming a mentor yourself if you're already profitable. Consider teaching people the best possible way of going about trading, giving back to people. That's the biggest thing you can do in your life if you're good at something. That's what I truly believe in morally. But I'm sure that a lot of people aren't. So if you guys are looking for that extra edge and looking for that one-on-one mentorship that can guide you through each and every step of the way, I recommend my mentorship program. Prices will be increasing once the course is released. So if you get in at this current price, it is currently at discount right now. You are more than welcome to set up a call to see if you qualify for our program in that regard. And then you'll be receiving every other piece of course material that we create in the future and any other piece of content absolutely for free for joining our program. So have a great day, guys. I appreciate your time. Thank you so much for paying attention today. Hopefully that you have put together a lot of your checks and X's for each and every one of these pieces of concepts here. And make sure that you utilize some solutions to really work upon these problems that you may be facing so you know exactly what your problems are and how you can best look to attack those problems to really further escalate your profitability, which if you practice, you will eventually succeed, and this failure that you may be going through right now will no longer it will cease to exist and you'll be profitable. So, guys, thank you so much. Enjoy the rest of your day. And as always, take care. If you have any questions, let me know and have a great rest of your week. Thanks.